Welcome again to the Forex Maestro Forex Foundation course. Today we'll be focusing on the strategy. Before I get to the strategy, I would explain something to you about the market, how to analyze the market. So the goal of today's class is, you remember when I was discussing with you on the day one, I said, let's assume that we know the direction of the market. Let's assume. Now, that assumption is what we want to break today. We want to understand, how do traders understand the direction of the market? How do they know? Let me share a story with you. I don't know if I've shared. I used to share this story a lot. Once, there was a time I traveled to Ghana for a seminar. And I think it was 2018, thereabout. I guess so. 2018, yeah, 2018. 2018, June. And then while I was there in the seminar, a student asked me, he said, Mr. Conrad, I just want to ask you a question. I mean, I don't know if it's related to what we're learning, but the Ghana cedis and dollars, dollar versus cedis, is currently 4.8 cedi to $1. $1 was equals to 4.8 cedis. Are you with me, guys? So he said, how would I know whether this value will rise or it will fall? I get that question every time, even in Nigeria. While I was in Nigeria, my students used to ask me questions about Naira and dollar. I guess every country I've gone to, people want to know, where should we put our money at the time? So that student asked me, I want to know, because I don't know, I want to take some decisions. So I want to know, is this cedi versus dollar going to rise or is it going to fall? I said, I know. Let's see the charts. So I brought out the charts. I went to Google. I think it was Google. I went to Yahoo Finance something. I just said, okay, go to Google and then let's bring out the chart. They brought out the Google chart. Just the way I went to Google Finance and Yahoo Finance the other day, and I was showing you some charts. So we checked for Ghana cedis versus dollar. And then we saw that it has been rising for several years. Just like Naira and dollar, it's been rising for over 40-something years. And I saw the curve. We saw it. So I told them, I said, well, you can see clearly that this thing has been rising for several years, and I do not see it falling. So therefore, I gave them a prediction that it was going to continue to rise. In fact, I even gave them a price. I said it was going to rise beyond 5 points. I think 5.5. I told them about 5.5. It was 4.8. I said it was going to rise about beyond 5.5 cedis per dollar. So I left back to Nigeria and I came back to Ghana 6 months after. 6 months after. And then I checked the exchange rate. It was 6.2. It has even gone beyond 5.5. It was 6.2. Coincidentally, there was a student who was in that former the first seminar I had, who was also in the second seminar. And I said, I remembered you said something about cedis and dollar. And truly, it has gone beyond 6.2. How did you know that it was going to go beyond 6.2? Some of you have been following me on my LinkedIn. There was a signal I posted on Bitcoin. There was a time Bitcoin was raving. I think it was 2017, thereabout. And then I predicted that it was going to fall. It's still there. If you check the time I posted that analysis, that prediction, you will see that Bitcoin was around, I think, about 10,000 thereabout that time. And then I said it was going to fall to about 5,000. In less than 3 months, it fell. And I got a lot of hits. People went on my social media and started insulting me. I mean, like, you're just going there saying, don't predict anything you don't know. And then and I was just laughing. I don't respond to all the social media blasting. I get a lot of that, so I'm used to it. In fact, there was one of my friends who called me. He was a big dealer in Bitcoin. He used to buy Bitcoin for people. He called me. He said, Conrad, I saw what you posted and then you are getting some backlash. He said, please put it down. I said, why? This is what is going to happen to Bitcoin. He said, Conrad, I'm in Bitcoin and I'm telling you, Bitcoin is going to rise to 100,000. Then it was about 10,000 or there, about 10,000 or 20, about 18,000, 16,000. What am I saying? 16,000. And I said it was going to fall to 5,000. So I said, brother, let me advise you. Let me be the one to advise you. Take your profit out of Bitcoin right now, or go and sell it. it's going to fall. It's going to fall. I've seen it on the chart. Not about up to 3 months. Go and check it. The time I posted it, and then check the price of Bitcoin at that time. Just go and do your own research of some of the things I'm saying. The Bitcoin fell. Oh my God. It fell and fell, and in about 3 to 6 months, it fell from the 16,000 or 19,000. It fell down to about 5,000, thereabout. And then when it fell, my friend called me. He said, Conrad, I'm in trouble. I said, what is the trouble? He said, man, I've lost a lot of money. I said, but I warned you. The next time I was doing training program, he was in front row. So what is the point I'm trying to make here? We can fairly predict the market. We can fairly predict the market. If you understand what I'm going to explain to you today, you might be able to start predicting the direction of the market easily. I want to give you one promise. Before you leave today, you'll be able to predict the direction of the market. That's one promise I want to give you, as simple as it is. I make things very simple. Before you leave today, you will be able to predict the direction of some certain assets by yourself. And you will just be by the time you get home and you say, this thing is up, going up, people will be like, and then you start shining small. All right. Trading is actually not so difficult. Let me tell you the problem. I've consulted with a lot of traders, big time, small time traders. Let me tell you the major problem they have. I told you the other day, a small baby trader, someone like your skill level now, with what I've taught you consistently, you can make about 50% of your capital in a year. And that is beyond inflation. And that is beyond fixed deposits. And that is beyond treasury bill. And that is beyond some investment. And that is even beyond some businesses at your level. So the problem we traders have is that we know we can do more than that. That is what the problem we have. Our problem is not that we don't know what we can do. We know that we can do more than that. And then so we try to increase our risk capacity. And when we increase the risk capacity, guess what happens? It starts affecting us. We get scared. We're not sure of our trades again. We are losing so much. We can't control our emotions. We close the trade, and then before you know it, bam, the whole account is blown. So I've gotten a lot of testimonials from people who just attended foundation course. If you're a trader, listen to me now. The problem you have, it is not about the predictability of the direction of the market. Maybe that is another problem. Maybe that is the real problem you have. But the major problem you have, I can tell you, is that of risk and your mental state of mind. That's what you have. Introduction to market analysis. Okay, so like I said, the basic thing we would focus on is how to analyze and understand what is happening on the charts. All right, now I'm going to go further and move on. Now, before I jump into that, I want to talk about what they call candlesticks. And even before I talk about candlesticks, I also want to come down a little to talk about time frames, because those are all the things I'm going to use today. So let me explain them before I go on to the market analysis proper. So let's start with time frames. So I'm going to bring out a chart. So here's a chart of USD Canadian dollar. Time frames are this 1, 2, 3, 4, 5, 6, 7, 8, 9. Now I want you to watch. Let me zoom in a little. Now I want you to watch the candle. This is called candles. All these things are called candles. All right. And this is where the prices are. You see the prices here. As the price of this asset is called USD Canadian dollar, USD card. Look at it at the top. So the price of the USD card is moving up and down. Now, I want you to watch. Pay attention now. Don't get distracted. This candle, let it finish first before you start counting. I'll tell you when to start counting. When a new one starts, when a new candle starts, we'll start counting how many minutes or seconds it takes. Now, 5, 4, 3, 2, 1, 0. A new candle has started. So start counting. Start watching. Look at your time or look at my time here. 9 seconds gone. And the candle is still forming. 26 seconds gone. And that candle is still forming. 52 seconds gone. 5, 4, 3, 2, 1. So how many seconds did it take this candle to form? Now you saw it, right? How many minutes or seconds? I want to see again. 60 seconds, 1 minute. What that exercise, what that thing I just did simply means is that if you put your chart, if you click time frame M1, it will take each candle 1 minute to form. 1 minute. Every 1 minute a new chart will form, a new candle will form. Every 1 minute a new candle will form. The same thing, if you click M5, every 5 minutes a new candle will form. Every 5 minutes. So each of these candles that are here is taking them 5 minutes to form. 5 minutes, 5 minutes, 5 minutes, 5 minutes to take them to form. If you put it on M15, it takes each candle 15 minutes to form. If you put it on M30, it takes each candle 30 minutes to form. If you put it on H1, it takes each candle 1 hour to form. 1 hour. If you put it on H4, it takes each candle 4 hours to form. If you put it on D1, it takes each candle a whole day. It will be very slow, a whole day. That means that this candle is for today, it's still forming. This one is for Friday, it's Monday to Friday. And this one is for Thursday. This one is for Wednesday. This one is for Tuesday. And this one is for Monday. Like that. This one is for the other Friday, Thursday, Wednesday, Tuesday, and Monday. Friday, Thursday, Wednesday, Tuesday, Monday. Like that. So if you put it on W1, what's the duration of W1 for each candle? So answer that now. Answer that. Let me see. W1 chart. How long does it take each candle to form? 1 week. Thank you. Good. It's just simple logic now. Okay. It's not 7 days because it's 5 days a week. The market doesn't move on Friday and on Saturday and Sunday. So it's 1 week. It takes you Monday to Friday. So the whole thing will start on Monday and it will finish on Friday. That's week 1. What about monthly? Of course, it takes 1 month. Good. Guys, you are hot this evening. So let's move on to the next thing. Let's move on to the next thing. All right. Now the next thing is I'll put it back on M1 now. Now I want you to watch something else. Don't watch the duration now. Now, guys, listen to me. Don't get distracted. Don't watch the duration now. Watch the position where the candle started from. And watch the position where the candle ended. Watch the position where the candle started from. Watch the opening, the place it opened from, and the place it closed. The candle closed. The place it opened and the place it closed. The place is open and the place is closed. When you watch it, maybe we'll show 3 candles like that. When you watch it, then note the kind of color. Note the kind of color that candle has. Are you ready with that? So 2 things we're going to watch. We'll watch where it opened and the level where it closed, and then we'll see the color of that candle. 2 things we're going to watch. So we'll watch like 3 candles consecutively. So we're going to start from the next candle. So we'll start all over. As the next candle is starting, put your eyes on where it starts. Put your eyes, make sure your eyes is marking where the thing started from, and your eyes is marking where it ended, the price where it ended, and mark the color. Are you ready? 5, 4, 3, 2, 1, 0. See where it started from. Put your eyes there. Just watch. Just pay attention. That candle will soon finish now. Maybe when it finishes, we'll review it. Finished. All right, let's just pause. Let's review what has happened. Now look at this candle that formed. Now, look at this candle. This is the candle we are dealing with. All right. I've put 3 lines that represent different junctions on the candle. One is the green line. One is the white line. One is the red line. And one is the yellow line. Which of the lines represent where the candle started from? If you were watching it, I would know now whether you were paying attention. Which of the 4 lines represented where the candle started from? This particular candle is what I'm dealing with. This one that is shaded black like this is the red line. It's not the green line, it's the red line. I don't want anybody to miss this thing. If you miss it, nobody can help you. Do you want it? Do you want to repeat the exercise? I can repeat it again. All right, let's repeat the exercise one more time. Pay attention. Remove all distraction. I told you, pay attention. We're going to look at a candle to start forming. Put your eyes where that candle started forming from, and put your eye where that candle ended. And I'll put different 4 lines on the candle to show you, to ask you where it started from. Is that okay? Let's go again. I'm going to start a candle. So this candle has started now. All right. Or let's let this one finish. Let it finish because you're not prepared. Let it finish. Just get prepared now. Remove your distractions now. Get ready in the next 40 seconds. Just get ready. Not this one, not this candle. This one is still, we're not looking at this one. We'll analyze the next one. Just pay attention. Let's use another currency pair. Let's use another currency pair for this. Now, you see, when the candle started forming, it was just going up and down, 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 up and down. And in the process, it was forming a shape. And every 1 minute, because we'll put our chart on M1. So let me draw what you will see, what you were trying to look out for. So this is what we're trying to look out for. Let's say it started forming from here. It will go up and down, 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 and then it will start forming a candle like this, something like this. All right, this is what it was doing. And sometimes the candles will be shaded. It will form it like this, and to shade it like this. Okay, these are the 2 colors of candles we have on the chart. Let me show you so you see. There are 2 colors of candles we have on the chart. You see, one is shaded and one is not shaded. You can change the color. Sometimes I like to change the color to, I like to change my color to black and white, something like this. It doesn't matter what color you use. Some people don't like this. Some people like yellow and black. Whatever color you are using doesn't matter. The fact is that I want to show you what differentiates the 2 types of candles. Why is one of a different color from the other one? Look at it. So for the first type of candle, if it opens here, if it opens around this place, if it opens around here, if it opens at this place, and then went up and down, up and down, up and down, up and down, and eventually went high, went low, it got high, it got low, it went up and down between, but this was where it opened from. This place was where it opened from. It goes up and down, up and down. The lowest point it went to was this, the highest point it went to was this, up and down, and then eventually closed here. So it opened below and closed above. Even though it was going up and down within 1 minute. Up and down, up and down, up and down, but within 1 minute. But it opened below and closed above. That type of candle is called bullish candle. Bullish candle. It means that within that 1 minute, price opened from at a low price and closed at a price that is higher than the opening price. What is a bullish candle? A bullish candle is a candle that closes higher than the opening price. Is a candle that is closing price is higher than the opening price. Is a candle that closes, any of the 2 sentences you want to choose, is a candle that closes higher than the opening price. You've been hearing the word bullish, 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 bullish. That's what it means now. It will have a different color from the other one. But this was the price, they call it the high price, highest price. And this is the point they call the lowest price. Why did they call it highest price? It means that within that 1 minute time frame, that was the highest price got to. Usually that highest is not the price it closed at. That was the highest it got to, but eventually it came down, closed at a little price lower. And then the low price is the lowest price within that 1 minute time frame. The lowest price it got to within that 1 minute. It got to a low price, but it did not close at that low price. It closed at a different price. Are you following me? So the highest price it got to, the lowest price it got to, the opening price and the closing price. That's the 4 types of prices we have in a candlestick. The opening price of that candlestick, the closing price of that candlestick within the 1 minute time frame, the highest price within that 1 minute time frame, the lowest price got to within that 1 minute time frame. That is what the 4 types of prices we have in a candlestick. So when you see a candle, it's forming like they call it candle because it looks like candle in your house. So when you look at it, bullish candle, it means the base of the body of the candle. This is the body of the candle. This place is called body. The base of the body of the candle is the opening price, while the end of the rectangle is called the closing price of that candle. Are you following, guys? Now, the second type of candle, the second shaded candle, or the one that is usually shaded or different color. You can even change the color yourself. You can make one black and make one yellow. I mean, it doesn't matter. Just understand what is happening in the candle. So, but if the candle opens at the top, if it opens at a price higher and closes at a price lower, usually they shade it or they differentiate it from the other color. When the price open at the higher and close at the lower, they call this a bearish candle pattern. A bearish candle pattern. When it opens at the higher, that means, so therefore, let's define a bearish candle. A bearish candle is a candle whose closing price is lower than its opening price. Its closing price is lower than its opening price. Its closing price is lower than its opening price. That is a bearish candle. Is that okay? So, and then the high is still here. All of them have the same, place for high and the same place for low. But what differentiates the two of them is that the bullish candle opens lower at the base of the body of the candle and closes at the top of the base of the candle, while the bearish candle opens at the top of the body of the candle and closes at the bottom of the body of the candle. So I'll take you back to the chart now. It will get interesting now when you now get to the chart. So you watch it for like 2 minutes. You watch different types of candle, and when they form, put your eyes at the beginning at the open price. When that 1 minute finishes, put your eyes at note the closing price, and also note the high and note the low. Is that okay? Are you ready? I'm taking you back to the chart now. Most importantly, watch where the candle started from and watch where it ended, and watch the high. If there's a high price, watch the high of that candle and watch the low of that candle. So watch now. A new candle will start in the next how many seconds? 45 seconds. Let's all watch together now. The next candle starts in the next 30 something seconds. Watch the open price, watch the closing price, watch the high price, and watch the low price of that candle. 4, 3, 2, 1, 0. See where it started from. Put your eyes there. It's changing color, but put your eyes at the top. Is the top of that candle that it started from. That's the body, not the high. And mark the low. Mark the lowest price, mark the highest price. These things are bound to change in the journey of the candle until the candle finishes formation. Now, It has started changing the color of the candle because it's now forming a higher price beyond the opening price. The opening price is now that place, that lower point. It has 10 more seconds to finish up. You see, it got to that high and came down. Let's see where it will close. It's closing there. So can you see this candle now? So now tell me, what type of candle is this? Is it a bullish candle or is it a bearish candle? That candle where my mouse is, based on what I've explained to you, this candle where my mouse is, if you are following now, tell me what type of candle this is based on what I've explained to you. If you're not following me, I'll know. Bullish, 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 bullish. We'll watch one more candle. I hope we get bearish candles at least to make it more a good experience for us. So now you know what a bullish candle is. The two prices in a candle that defines whether it is a bullish or bearish is just the opening price and the closing price. If the closing price is above the opening, is a bullish. If the closing price is below the opening, is a bearish. We have 4 prices. A candle opens at opening price of a candle is 1.23401. High went high to 1.24401. It went low to 1.20401 and closed at the candle closed at 1.23901. This is the kind of question I said. You see, it's very tricky, but you can get you can get it. So tell me what type of candle is this? Is it a bullish candle or is it a bearish candle? Let me see those that will get it. Is this a bullish candle or is it a bearish candle? Look at the question. Bullish. It's a bullish candle. That's great. That's great. That's great. That's great, guys. You guys are doing well. But can somebody? It's bullish, right? Awesome. But some people are wondering how are they getting that it's bullish like this? What are the most important things you looked at in this information I gave you? What are the most important things you look at to consider whether a candle is bullish or bearish? Help somebody. Open price and closing price. God bless you, Baba Jide. Those are the 2 things. Forget the high, forget the low. It might not even have a high. It might not even have a low. The low might be the same with the opening or the closing. They're just 2 things. Just 2 things. The opening price and the closing price. That's all. That's all. That's how they got the answer. Is that okay? So let's move on to the next thing. The next thing I have for you is, let's now go to the market analysis proper. Now, 3 components, 3 most important components of an analysis. When I showed you this chart, you open a chart like this, and you're like, what am I going to do? Should I use a D1 or whatever it is? Well, let's just say any time frame you use, doesn't matter. It's the same thing. You open a chart like this. How do you make sense of this? How do you make sense of it? That's what we're going into. When you look at the chart like this, what is it telling you? How do you make sense of this? This is a chart of Euro USD. This is a chart of gold. Where's gold? XAU. This is gold. How do you make sense of all these things? What does this mean? All right. So we're breaking it down gradually. 3 most important things in market analysis. So 3 most important components of analysis. The 3 things you have to do. The first one is trend identification. What do I mean by trend identification? Simple. Identifying the direction. The first thing you have to do when you look at a chart, when you bring up a chart to trade it, you say, I want to trade Forex now. I want to trade. You brought out a chart of maybe Tesla stock, or chart of SP 500, or chart of Bitcoin, or chart of Euro USD, or chart of gold, or chart of whatever asset or commodity. You say, what is the direction of this asset? That is trend identification. The first thing you have to ask, the first question you must answer is the direction of that asset. If you don't know the direction of that asset, The second and the third question, you are going to be wrong. Now, how important is trend? A guy goes to the beach. I'm sure all of you know the beach. You have beach in your countries. A guy goes to the beach, in front of a beach, and he was. If you have not seen beach before, look at the look at the image behind me. That's how a beach looks like. Okay, a guy goes in front of a beach. Are you me, guys? And he looks at the water, and the water was flowing to flows to his direction, and then it flows out of his direction. Every time the water flows to his direction, and the water flows, it was standing in the sandy part and was looking to the water. So he observed that the water will flow to his direction. At the point, the water will flow back to his direction. He was standing with his friend. So they were both arguing. They were arguing. One of them says, my friend, it's like this water, the redirection of this water is that it is flowing towards us. The friend said, no. The direction of the water, the main direction of the water is that it is flowing away from us. They kept arguing. I don't know if you have seen that pattern in the beach. I don't know if you have gone to the beach and you have seen that it flows to you and then it flows away from you. I want to be sure I'm not the only one who has gone to the beach. All those people in Lagos, all of you have gone to beach. And in Tanzania too, there's beach in Zanzibar. These two guys were now arguing. One says, the water is flowing towards me. The other one says, no, the water is flowing away from us. It's flowing into the ocean, to the deep inside. So they kept arguing. So they said, okay, you know what? Let us throw a ball, or let us throw an object into that water. And then after some few hours, we'll come back and check where the object is. Then that will tell us the direction of the water. So they threw an object into that water. Please tell me, where would they find the object? Where would they find the object? Okay, you get the answer, right? You get what I'm trying to do. Fire into the ocean. God bless you. So you get what I'm trying to make. But why is that water? Why is it deceiving them? Why is it coming towards them and going away from them? Why is it that one that was arguing that the water was coming towards him? He would have just jumped into it, and before you know it, the guy will be carried away. That's how important trend identification is in trading. You see, how did I bring ocean and water into the trading? When I show you the chart, you see how it goes up and goes down, and goes up and goes down, and goes up and goes down, and goes up and goes down. Let me show you so you see practically what I'm talking about. Now this is gold chart. Now look at it. If you didn't know, let me make it small so you see. Now look at the current price of gold here. All right, I'm going to shift it back. This was 2000 and this is current price. Let's shift it back to 2017. Look at 2017 here, right? So you see how it goes. It went up, it came down. All right, it went up, it came down. It went up, it came down. It went up, it came down, and like that. And if I was following it from 2017, look at it. Let me put a line there. This 2017. Hold on. Let me start from here. It went up first, it came down. Now look at. I'll show you that green line later. Look at. The green line has even gone down. It has disappeared. Now look at the current price. Look at the current price. Look at where it is. Can you see? I'll show you the former green line now. I'm drawing the chart down. You see? Look at it. Look at it down here. Look at the distance. What does that mean to you? It means that if I took a step backwards, or if I knew that in the next 3 years, a gold eventually would have gone higher than the price where it was. If I only knew, what would I have done? I'd have just stayed there. But I didn't know. But if I zoomed in closer, rather than taking a step back, if I was following every wave of movement, guess what? I'll be utterly confused. Utterly confused. If I was following every wave of movement, look at what would have happened. So 2017, where is it again? 2017. Look at 2017 here. Look at it here. Look at 2017. Down. I would think it was going down. And then I'll say gold is going down. Gold is falling. And then the next thing it goes up. And then after a while it goes down. Look at how far down it went. It was down. I'm like, gold has gone down. And then it goes up again. And then it goes down. We're like, wow, what is really happening? Why is it confusing us? It goes down, it goes down, it goes up, it goes down, it goes up, it goes down. And this is one of the major problems traders face. The market has two directions. Even though it has a hidden predominant direction, it doesn't show it to you. Just like the wave on the sea. The wave on the sea, to your eyes, to your optical eyes, to your physical eyes, if you follow each of the waves, you are going to get confused. You would think it flows to you, and you think it flows out to the sea. You think it flows to you. You think because you are following each wave of the sea. But as a technical trader, as a sound professional trader, you are not supposed to be tricked by the wave of that chart. You are rather supposed to play along that wave. You are supposed to take the opportunity of that wave and I mean, ride on that opportunity of the wave. It's not supposed to confuse you. This is a big problem traders face. Trend is a big challenge. But you know what? I promise you something. Before you leave the class today, you're going to tell me the trend of the chart. And you'll be glad you did. It's a big problem. Let me show you. It's very, very big. It's a big challenge traders face. In the Forex apprenticeship program, we spend about almost like 3 weeks talking about trend. We zoom in further. We zoom in further. Okay, let me show you the problem traders face. Now look at it. The guy sees the thing going up like this. He say, okay, guys, gold is going up now. Let us buy gold because gold is going up. Let us buy gold. Let us buy gold. So everybody buys gold because why? They've seen gold go up. So they enter the buy for gold. Why? Because they've seen gold go up. So they think that it's going to keep going up. As soon as they enter the buy, it just goes a little slightly different, just a little more. And then you know what? It doesn't go further up. It goes start to drop. And then they start to lose. You know when you place a buy and it doesn't go up and it goes down against you, you are losing. And they start to lose money and they say, but we saw the thing going up from here and then we entered the buy here. Come on, we expect that it will, they said the trend is up. So why are we losing? And then the guy has lost. He has lost. By the time the thing gets here, he has lost so much money. So he gets angry. He closes the trade. Say, oh, let me just take my loss. He loses some money, but let me take my loss. It goes off. As soon as it goes off, gold picks up again from there. I don't know. Now that's not his dilemma. The traders face a lot of problem. That's not the problem. This one is even better. Now look at what he does. He doesn't go off. The guy doesn't go off. He just closes his trade. He says, I've lost so much. I placed a buy thinking it's going to go up. It's not going down. I've lost. I wish I knew. Look at it was going down. Maybe gold was falling. I wish I knew. So the guy will place a sell now. Because why? He saw that gold was now going down. You place a sell. When you place a sell, what are you expecting? That the price will keep going further, right? Like we dealt with, we talked about yesterday. So he was expecting now that gold will start to go down. That's the expectation. Then it goes slightly down, just slightly. And then it reverses again and start to go up. And then the guy start to lose. It was like, but I saw it going down now. I saw it going down. And I thought it was going to go further, and I entered the sell. And then just reversed. And I'm losing. He loses big amount of money again. He said, oh, let me wait. It waits more. The thing is going low, losing more. He said, God, what is this? He closes that trade. He said, let me take my small loss. Let me take the loss. Oh, gosh. Oh, he closed the trade again. He closes that trade. And he says, if only I had known that the thing was going up, I would have just, look at, it went up from year to year. Oh. Then he will now say, oh, maybe it's going up now. He will now enter a buy again. Then he enters the buy again. Say, oh, I didn't know. And then the thing will now go a little, and then it reverses again, it loses again. He starts losing, say, they must be following me from the village people. Hi, this market, the broker, hey, they will blame everybody in the world. Everybody, but they will not blame themselves. Traders can blame anybody. Traders can blame their internet. What am I saying? Traders can blame their tie. You see, it is this tie. It is tightening my neck. I'm telling you, I used to be in the blame game when I started as a trader. I blame everything. I blame trader. I blame broker. I blame internet. I blame everybody, but I will not blame myself. What a terrible life. What a terrible way to live. I blame everybody, but I will never blame myself. All of us, we're packing ourselves, group of traders. We blame everybody. We're cool to blame everybody. We blame the market that we don't even know. We say maybe some people are behind the market. They are witch hunting us. And then we blame the broker. We blame internet. We blame everything. We blame lack of capital, but we never blame ourselves. So I sat back. I told myself I will stop this blame game. So maybe some of you are still in that blame game. You are looking for somebody to blame. You are still blaming somebody. You will never stop that blame game, and you will never grow. If you are still in a blame game in any area of your life, the moment you put the blame on someone else, you never grow. I'm telling you the truth. So the same thing applies to trading. I told myself I would never blame anybody. I'll blame myself. There must be a problem with me. I don't care whether the broker is doing anything. I don't care. I'll look for a good broker, but I don't think that's my problem. I don't care whether my internet out. I go and find internet. I started blaming myself. I say, go and learn. Go and learn. I told myself, learn. So I removed myself from those people. We used to pack ourselves. We're like 5 or so. So I stopped following them. They were still blaming everybody, blaming everything. We can blame it. We blame everything. We blame Nigeria for being Nigeria. We blame Nigeria for everything. We blame everything for trading. We're blaming everything. So I stopped the blame game. I started focusing on myself. Anytime I don't make a profit from trading, anytime I have a problem, a challenge in trading, guess who I blame? Even to date, I blame myself. Every time there is a challenge I face in trading, I don't blame anybody. I blame myself. Even in my personal businesses, the businesses that I run, things that I do, if I delegate a work for my subordinate, if I tell my team members do this thing, if he doesn't do it properly, I blame myself because I did not check over. I didn't call him and say, hey, what I say you should do, let me see it. I always blame myself. And that's how I grow. So I removed myself from the blame game. I said, no, there must be a problem. It's not village people. It's not broker. It's not anything. Maybe I don't understand direction of the market. Maybe there's something that I need to know. And that's what the trader kept doing. He placed a buy, they lost, he closed the trade. He said, oh, it was going down. He placed a sell. He thought it would go down. The thing went up. He lost big money. He closed the sell and lost again. He said, maybe it's a buy. He placed buy again. The thing went down. He lost again. He said, maybe it's a sell. He placed a sell again. The thing now went up. He has lost all his accounts now. By this place, he has lost $5,000 or $1,000, or all his accounts is gone. But if only this man or this woman or this trader step back and try to see that from this place to this place, the market generally went up. It was a wave. Just like those people threw objects in the ocean and they found it far away inside the ocean, but they were arguing because they were looking at each wave of the movement. So too is the market. And that's why traders don't get it. But when you take a step backwards, when you rather focus on the trend, that's why we call it trend. When you focus on the general direction, the primary direction, the predominant, we call it predominant direction. We call it general direction. We call it market context. I call it market overview, the perspective, market bias. I mean, whatever name you call it, it is the general primary direction of the market. I call it order flow, where the flows of orders are going generally. The context of the market. This is most important. I'm not going to look. We can't deal with trend. We can't finish trend matter here. But I'll give you something that will make you identify trend before you leave here. But I'm just saying that trend goes deeper than that. Trend analysis goes deeper than that. But this is how, and you don't get this kind of information on the internet. That's the painful part. They just focus on strategy. Do you even know that the strategy will not work in all of the? Do you know what they call? There's something they call face of the trend. Face of the trend. Each trend, whether it's going uptrend, it has faces. It has a pullback face. It has retracement face. It has exhaustion face. It has different faces, and that's why some of the strategies that you're using or you have learned, they don't work in some of the phases, even though it's an uptrend. I mean, there's a whole lot. So there's a baby. See, what the class you are in now is called class 1 of trend. Class 1, class 2, class 3, and class 4. You will deal with it in a future class, in a future program. But here now, at the class 1 level, at least you should be able to identify a trend. And that's what I want to achieve with this class today. So at this class level that you are, if somebody asks you what is the trend, you should be able to tell it. Say, I know that this is uptrend. Forget the wave is uptrend. It's downtrend. You should be able to tell. If I can achieve that, I've done a lot of. I mean, if we can achieve that today, we have jumped some scale. So, important is to identify the trend. Now, you know why I was giving you that illustration of the ocean, so that you understand the efficacy of trend. All right. Another place you will see trend. I don't know why. I know that Nigerians are here, but let me just give a little tip to the Nigerians that are here. Another place you see trend is in the currency they call US dollar, Nigerian naira. It looks like this. This is what it looks like. And then the thing started from maybe $1 equals to 0.4. You know that there was a time dollar was 0.4 naira, and then it went up, it came down, it went up, it came down. There was a time when it was I think it was 180. It came down to about 150. It went up to about 260. It came down to about 200. It went up to about 300. So look at what happened last week. Let me show you what happened last week. I was still telling my students about this trend of naira dollar. I was still telling them the other day, and just while I was telling them, dollar did some funny thing. So what we saw was that dollar was at okay, no, let's do it like this. It's been an uptrend, but okay. So it was at about 470 thereabouts. It's about 470, and then it came down. This has been the movement all along, all the years. But it went to 470, and then it came down to 430. That was last week. Now 2 weeks ago, I guess so. And so one of my students called me and said, Mr. Conrad, so what do you think now? Dollar fell to 430. I said, see, I've told you several times. I'm not changing my words. What we're dealing with is the historical trend of dollar versus naira. You can do it with your own currency too. And that's what I did in Ghana when the story I told you that they say I told them to show me the trend, the chart. I just look at the historical flow, and then this was what I saw. And to make it even more interesting, that first time I went, when the guy was saying, "Please, sir, where is the direction of CD is going to go?" The guy said the president of Ghana promised. I don't know whether it's president, but maybe the government promised that they are trying all effort to make $1 equals to 1 CDs. And then I laughed. They didn't know why I laughed, because I was coming from Nigeria, and where we had a rumor like that too, that some arm of the government were promising that they will make $1 equals to £1. And they said, "Why are you laughing?" I said, "Because the government cannot do it. It's not in their powers to change the trend of the market. It is in the power of the market itself, the buyers and the sellers of the assets. It's not the government. The government is not going to force anybody to buy dollars or to sell dollars. No, it's the demand and the supply. Do people want it or they don't want it? You get what I'm saying? So I'm not talking about politics, but I'm just trying to let you see that as a trader, when there's some discussion out there that are ridiculous. So you don't have to argue people. Just laugh at them and laugh at their ignorance and move on. There's no way anybody can try to do that. If they do that, they are going to be paying their blood and their money. They are going to pay a lot of money to do that. It's the market forces. So when dollar went down to 430, I told them, go and buy. I would advise, if you have money, Naira, you buy more dollars. And what has happened now? As of today, dollar, I checked it and it was going up again to about 450, almost like 460. It's going up again. How do I know these things? How do I know these things? I'm not doing magic or anything. It is just the historical movement I'm looking at. This thing has a strong bullish force. It has a strong bullish force. It has a strong bullish sentiment. What does that mean theoretically to you? It means that people in the market prefer to buy this asset over this asset any day, anytime. People in the market prefer to buy gold over dollar any day, anytime. People in the market prefer to buy SP 500 over the currency any day, anytime. People in the market prefer to buy dollar over Naira any day, anytime. It is the strong force nobody can break. That's where the money is going. That's where they call it order flow. That is where the orders are going. The flow. That's the primary direction. See, if you understand the primary direction of an asset, the only thing you just have to do is just to wait and know when to enter. That's where we'll come to the second component of the market analysis. But I want to deal with this first one. We talked about trend. You can call it order flow. You can call it market contest. You can call it market bias. You can call it market force. You can call it primary direction. You can call it predominant direction. It doesn't mean that there will not be wave against that direction. There would be. Look at, there was wave down, there was wave down, there was wave down. What does that mean? That means even in an upward trend, there could be a downward wave. Yes. And that's what confuses traders. That's where their problem starts from. That's where the problem starts from. I showed you gold now. It was going down. Didn't it go down? It went down. But if you are taking a step backward, if you study the bullish force, the strength, the force, the sentiment, the primary direction of this asset, you would have known that it might have a downward wave. In fact, as a smart trader, you should expect that downward wave. As a smart trader, you should expect that means there must be, they call it pullback. There must be a pullback. It's a must. M-U-S-T, must. When you understand this whole phases, this whole dynamism of trend, honestly speaking, you will just be laughing when the chart is doing what it's doing. You just be looking at it like it's like a music that is playing that you know the lyrics. You know the lyrics. That's what will happen. You just be anticipating when the lyric will start to play, but you know the lyrics. You get, that's how important trend is. Don't jump to strategy. Teach your strategy. They will teach you strategy. You will use it. It's not like strategy will not make money, but when it gets into a phase that the strategy does not understand, it will lose money, and then you discard the strategy and say, this strategy does not work. No. The strategy works in the phase it's supposed to work in. You are the one who didn't understand that if you allow it for a long while, it will work. Or if you use it specifically in the phase of the market where it's supposed to work, it will work. There are different types of strategies all around. Is that okay? I hope I'm not speaking beyond your head now. I'm just trying to carry you gradually So you can take a step back and take time to study the trend before you jump in and buy and sell. Let's buy, let's sell. Where do you buy? Where do you sell? Always you are buying, you are selling, you are clicking buy. What? Take time, spend some few minutes and days and hours to just understand the force behind this chart. Is it forcefully going? Is it a bullish force or is it a bearish force? Take time, and that will save you a whole lot. And you already know what you want to do. So the second thing is entry points. Having identified the trend, then you now have to identify, where do I enter to buy or to sell? Where is the entry point to buy or to sell? Is that okay? That's the second thing. So when you are analyzing to trade, when you are looking at the chart and trying to analyze to take a decision, the first thing you have to do, spend your time to do, before anybody say, can we buy, can we sell? The first question you should be asking yourself is not, can we buy, can we sell? Is what's the direction of the chart? The second question is now, where can we enter for a buy? Now that we have known that it's uptrend, then where can we enter for a buy? Now that we have known that it's a downtrend, where can we enter for a sell? Is that okay? So we'll look at all these things today. And then finally, and also important, is the exit point. Where do we put our take profit and where do we put our stop loss? Because the trend cannot last forever. I mean, the wave cannot last forever. Or the cycle or the phase of that market cannot last forever. There's a time where the trend bends. So what do we do? So you must know these three things usually before you place the trade. Usually before you even place buy or sell. I'm telling you, you must know the three things before you even usually place a buy or sell. So you must know the direction of the asset, you must know the entry point, and then you must know your exit point before you even place a trade. Let's go to technical indicators. Technical indicators. Now, some people have said indicators are they are lagging. Indicators are this, indicators are that, indicators are this. Can I tell you something? Everything is an indicator. Everything is an indicator. And if you think all indicators lag, it means you have not done your study. Some indicators don't lag, and some of them are oscillators. Some indicators help you to tell a phase of the market they call exhaustion, if you know what I mean. And that is not a lagging phase. So when you say lag, you're trying to say the trend would have started before the indicator will show it. And how is that a problem? How is that really a problem? It's not usually a problem. Is that okay? So all those things you must have taken up against indicators, I want you to first of all remove it from your head. Everything is indicator. Everything is what? Indicator. What is indicator? Something that tells you to do something. That's an indicator. So whether that indicator uses historical data or uses some form of data, it's still an indicator. Are you with me? And as a trader, you would never do without indicator. You'll never do without indicator. So if you have been blaming indicator, some of you probably in the blame game, you are still blaming indicator as a result of the losses. It is not indicator that is a problem. It is how you apply those indicators. I'm telling you the truth. It is how you apply some of these indicators that is the main problem. So it is not the indicators that are the main issues, as you're going to see. All right? I met a young man one time. Then I'd been a tutor. I've been teaching people how to trade. I've traveled a lot, and then I met this young guy, and the guy just started trading like say 3 months. before I met him. So I was chatting with him. How you doing? How do you trade? So what method do you use to trade? He said, yeah, when I started with indicators. I started learning some indicators, but right now I don't want to use indicators again. The indicators are lagging, and I'm going to use what they call price action. That's what And I laughed. Why? Why did I laugh? Why I laugh is because I wasn't mocking him. So it's just like when I asked that guy, and the guy told me that he has been trading indicator for 3 months. He read somewhere that indicator is lagging, it's trash. You should learn price action, blah 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 blah. I laughed because it reminded me of a child who is in kindergarten, whom they told that go and bring your counters. Counters, what they call counters, the crown of bottles. When we're in kindergarten, we'll pack this crown of bottles to count things. You see, stones. Some people use stones, some people use fingers, some people use toes. What are those things? They are indicators. You get what I'm saying? They're indicators. So they help you do the major work. They remove the major work. And while they are helping you to do that, your brain is processing how they are doing it. Your brain is processing it. Your brain is understanding some of these things. And then it gets to a point. Do you know right now, I can open up a chart. Like when I went to Ghana and then they showed me that chart. I can open up a chart right now without putting any indicator on that chart. I can tell you the trend. My student can do it now. My apprenticeship student, they can do it now. But they didn't know they can do it. I'm not sure they know that they can do it. Initially, when I started with them, I was teaching them how to draw some lines called swing lines. and I was watching for that when I was giving a remark. If you don't draw that line correctly, they will say, Mr. Conrad. I said, yeah, draw the line, draw it. I want to see it, draw it. I was teaching them like kindergarten. And after a while, I wasn't looking for the line again. It was just on their head. They know the swing without drawing a line. So now when I look at the chart, I can tell the trend without putting this indicator on it. But did I start like that? No. Nobody started like that. So that was why I laughed at the young man. That was why I was laughing. I just laughed at him. See, you want to start learning how not to use indicator? At the beginning, your head is going to sweat. You're going to sweat. So I'm talking to some of you. Some of you know yourself already. You are already blaming indicator. If you are blaming indicator for your loss, indicator was not the problem. In fact, most professional traders still use indicators. I still use some indicators. I still use moving average indicator, and I'm going to show you how it works. I still use stochastic, relative strength index. I still use Bollinger Band. Fantastic indicators. I still use them because they work. They help you a lot. So throughout those, next time when I see you, don't tell me indicators are lagging. Don't tell me that thing again. All right. All right, let's go on, guys. I want us to be on the same mindset. That's why I'm debunking some of those things you watch on YouTube and everything. I'm trying to cut them off first. Let us agree on something before. I can't teach you if you don't agree on some things with me. All right. So let's go on. Technical indicators. All right. You see how it will help you. It will make life easier for you. And then later on, you can switch on to not using it. So when I'm teaching you and I give you an assignment, please do the assignment. Please trust in my competence as a teacher. When I give you an instruction, I'm not trying to boss on you. No, I'm trying to help you because I've helped thousands of traders like you. And you are not different. You say, Mr. Conrad, my problem is different too. My problem is that I don't used to understand things easily. You are not different. I tell you. I'm telling you the truth. You are not different. If you open your heart, I will teach you. You are not different. Believe me. You say, Mr. Conrad, I'm telling you the truth. You know how many things I've tried to learn, I did not learn. All right, let's go on. So, what are indicators? Quickly, indicators are mathematical tools that help us to forecast future price changes. They are mathematical tools that help us to conduct price forecast. Is that okay? And they have different types of indicators. We have the one they call the trend indicators. These ones are used. Listen, these trend indicators, use them for what they are used for. And what are they used for? For one thing, Trend. That's why they call them trend indicators. Their name is called trend indicator because they use them to identify trend. And now you know the meaning of trend. What's the meaning of trend? Let me not make an assumption. When somebody says trend, what does it mean? Let me see. Let me see those who have followed. Trend, what does it mean? Pattern. I love that. Oh my God. I think I'm speeding. I need to break down some things. When she said pattern, I just remembered some things I need to have shown you. Direction. In vogue. Nice one. So when you hear the word trend, it means direction. Is that okay? For simplicity, of direction is easier to remember. So trend indicators help us identify direction of the market. And what are the examples of these trend indicators? Number one, moving average. Moving average. Number two, parabolic SAR, PASA, PISA, parabolic SAR, parabolic. That's the full name. The full name is actually long. Parabolic stop and reverse. That's the full name, but just write PISA there. And then Bollinger Band. There are so many, but let's just stop there. So we'll use one of them today to see how we can identify a trend with it quickly. Then the other type of indicators are the ones we call them oscillators. Oscillators are used for different things. One of the things they are used for is to know the turning points ahead of time. Example of them is RSI, relative strength index, and also MACD, and also stochastic. Okay, so what we'll just do is we'll just pick one of the trend indicators and see how it works, and then probably we'll pick one of the oscillators too, depending on time, and then we'll see how it works. Then how do you attach these indicators to your chart? So let me go practical now. Let me go to my chart. Now, this is a chart of gold, and then I want to attach an indicator on it. So if you see, there's an icon here that there's a plus there, and then there's F, somewhere F, written F like this, F and then plus. You see there, if you just put your mouse, you will see indicators list. You just put your mouse on it, you see indicators list. When you click that that icon, you click it, you will just see any icon you put your mouse here will tell you the name. Let's start from here. Even the time frame, put your mouse, you see 1 minute, 5 minutes, 15 minutes, 30 minutes. Yeah, let's go to another one. Zoom in, zoom out. What about this one? Indicators, period. You see, plenty things like that. So indicator is this one. In case you're looking for it, just put your mouse across all the icons, you will find it. Or you can go to insert and then you go to indicators there. So easiest way is from here. Just click indicators and then you go down to trend. See, there's trend, oscillator, volume, bill, Williams, and custom. So just go to trend. When you get to trend, you look for let's look for any of them, Bollinger Band, anyone you want, envelope, envelopes, Ichimoku Kinko, moving average, parabolic SAR, deviation, a lot of them. All right, and then you click. Once you click it, it will draw the indicator. However, the indicator is meant to display your chart, it will just display your chart. Okay, I'm coming back to it. Just stay with me. I'm taking the class step by step. So we have seen how to attach indicators on our chart just by looking for that F plus. Click it and then go to any type of indicator you want. If it's trend indicator, go to trend, look for the indicator under the trend, and then you click it, and then it will drop the indicator on your chart. Is that okay? Very simple, guys. Very simple to operate. Then let's deal with the indicators one by one now. Let's look at the first indicator on that trend, which is called the moving average, which is the most popular indicator ever made. I don't know how they found this indicator and put it inside the chart. It's interesting. So let's look at it. It shows you the price, average price, or they'll call mean price for a certain period. Average price for a certain period. I don't want to go into the mathematics because you don't need it now. There's no time. So let's not go into the mathematical component, mathematical construction of this moving average. If you need the mathematical construction of this moving average, then maybe you can keep hoping I will do a video later on, or maybe some webinar in the future, and I'll look at the mathematical components of some of these indicators. But they are also on Google. You can search, or you can look for help on the trading platform. You can just go to Google and say, And what is how is moving average constructed? How is moving average computed? But we don't need that. We just need to see the tool on the chart and see how it works. Is that okay? But basically what it does is it computes average of prices for you for over some period of time. So we have different types based on the way they compute the average for you. So one is a simple moving average, SMA, simple moving average. Then one is the exponential moving average. It's just the formula in each of them that changes, but they are all moving average types. Then one is smoothed moving average. Is that okay? And then final one is the linear weighted moving average. There's no best. Some people have asked me, Mr. Conrad, which one is best among all this type of moving average? There's no best. It's all about your research. I mean, you can use any of them and still produce results. It's just about, I mean, have you tried it? Have you tried it before? Have you tested it? Have you researched it? You know, that's what matters. Simple moving average will work. Exponential moving average will work. Smoothed moving average will work. Linear weighted moving average will work. And what is different between all of them? It's just in their mathematics. Okay, in case you are thinking, what's the difference between simple SMA, EMA, SSMA, and LWMA? What is different is the formula. And I don't want to go into all the formulas because this is not mathematics class. I can give you I can go into all the formulas, but there's no need for that. This is how it looks like. All right. This is how it looks like. It's just a line. Moving average is just a line. So let me take you to the chart and show you how to attach moving average itself on the chart. So again, we'll go to the indicators, we'll go to trend, all right, and then we'll go to moving average. Now, you see parameters, levels, visualization, all right? Just always leave it at parameters because it will require you to set parameters. Now, in the moving average, you have period, shift, the MA type, and then the apply to. I'll try to explain them to you, but don't get confused. Stay with me, please. Stay with me. I know it's getting a little technical, but just stay with me. It's very simple. Now, period. What does period mean? Period means the number of candles, the number of, the word period, number of periods. Let's use period. Now, if somebody's using M1 chart, if you type 20 here, what you're trying to tell this calculator is that look for 20 minutes, go 20 minutes backwards. So pick 20 candles. Pick 20 candles. 20 candles now. 1 minute, 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 1 minute. 20 of them. That's 20 minutes, right? So you're telling the calculator, because this is the calculator, you're telling the calculator to pick 20 candles, 21 1 minute, 20, if any chart at all, just pick 20 of them, 20 candles of them. Now find the average of the price and then plot it as a line for me. Keep finding the average. Keep finding the average. So every 20 minutes, find the average, plot it as a line. Every 20 minutes, find the average, plot it as a line. At the end of the whole thing, you will now see a line, a curve. What is that curve? That curve is the connection of the coordinates. So that sometimes it's difficult to actually break down these things, So that line it draws is the connection. It's find average of every 20 candles behind it, because that's what you put there for it. So it will put every 20 candles. I'll find the average. For the next candle, it will find and pick the next 20 candles behind it, find the average. For the next one, so by the time it does that, it will now draw a line. So when it draws that line is a line connecting all the results of average of the last 20 candle. So it's an iteration. Is like, that's what they call the moving average. So for the next candle now, it will add the last 20 candles and find the average and get the answer. For the next candle now, it will find the last 20 candles, find the average, and get the answer for you. For the next candle again, it will find the last 20 candles, find the average, and get the answer. Like that. That's what I mean by period. Is that okay? So you are the one to specify to the calculator what period you want. You are the one to tell the calculator. So now you can say, what period should we use? What period should we use? I'll tell you I'll tell you some things about the period, what period to use later on. But you can use any period you like, basically. It's just about the same question I will ask you is make sure you test whether that period works. If it doesn't work, then that's the reason why some of you have to learn how to do research. You see? But don't worry, I'll give you some recommendation in this video. You will learn how to do research, and you can use any period you like and find the result and see whether it's different from any type of period. So you are now advanced. Everybody starts from a level 1 and goes up. That's period. Shift. Shift means that you should shift the indicator. Just always leave shifts at 0. Just leave it at 0. It doesn't matter. Now, MA method. MA method is now the type of moving average you want. Which type of moving average do you want? Do you want the simple moving average? Do you want the exponential moving average? Do you want the smoothed moving average? Or do you want the one they call the linear weighted moving average? Which type do you want? Is that okay? What I will do in this class is to give you recommendations. But what I want to tell you is that as a professional trader, you must understand that every recommendation has to be tested. And at a point, you must begin to develop your own recommended settings and recommended parameters or strategies. Is that okay? That will probably make your result far better than an average person or other people. So we'll start off with giving you some recommended settings that you will use, and you will see that it works. Then later on, don't stop there. Knowledge has to be progressive. Let's go on. So MA method, let's choose anyone for now. Let's just choose maybe simple. I'm coming to give recommendation later, but leave recommendation. Let's just set this indicator. Now, apply to. What does that apply to mean? Apply to is saying that, you are instructing this calculator to pick 20 candles. A candle itself is an object, let's call it an object. A candle is an object that has 4 or different types of prices in it. So which price are you instructing the calculator to really pick? Are you instructing the calculator to pick the open price or the closing price or the high price or the low price, or what are you? So you're telling the calculator, find the average of the last 20 candles. Each candle has different prices. Which one do you want us to pick? That's what calculator is asking you. Which one? Do you want us to pick all the open prices for all of the 20 candles? Or you want us to pick the close of all the 20 candles? Or want us to pick the high, or low, or medium? This is where you specify it. Again, I'll give you a recommendation, but you're not going to stop there. We're going to move forward. So apply to. So let's apply to anyone, open or close or whatever. Let's apply to close. All right. Style is just color. So you can choose any color. Color doesn't add to the calculator's price computation. Then thickness. Thickness is this one. You want the line to be thick because it's going to draw a line. So let's make the line a little thick. All right. So then you click OK and look at it. Look at the line. This is a moving average line. So what does this line mean? So what I was explaining to you is this. You see, this line, this part of the line, look at it. Let me use something to show you. Look at this. Let me put it there. This part of the line, you can see it rests on this candle. This part, this tip of the line, it rests on this candle. Now, this tip of the line shows that this place is the price, because it's a price. Look at it here. See, it's a price. It's a price level. See, it's a price level. So this place is a price, is a result they got. Is a result they got for the calculation of the last 20 candles, of the closing prices of the last 20 candles. That means this candle's close, this candle's closing price, this candle's closing price, this candle's closing price, this candle's closing price, this candle's closing price. How many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, and 20. Up to this place. The closing price from here of this candle to this place. That is the result that is here. And then for this place, For this place, this dot, this place that aligns with this part, second candle here. This place now, it is a result that is gotten by looking for the last 20 candles behind this particular candle now. Another 20 candles behind that candle. The average, that is the result. Is that okay? Just in case you are thinking, what is this line? This is called the moving average line. That is how it is gotten. So how do we use this line? I'll tell you. I'm taking you gradually, okay? Stay with me. I'm just showing you the construction of this line now. So you know what the moving average line is. And then you are the one who specified the 20 there. You can say, calculate the average of 100 candles for me every time. Or calculate the average of 50 candles for me every time. You get what I'm saying? So you are the one who will specify it to the chart. And then it will draw it for you. And every new candle that forms, if a new candle forms now, let me put it on M1 so you see. Just watch. As a new candle is forming, the line will extend. Just watch. Observe now. See. Let me zoom in. Just watch. Pay attention. Today's class is an observation class. Just watch. As this candle is finishing, look at the mouth of this moving average. Look at the way it looks now. Just watch it. When the candle finishes and the new candle starts, it will start to compute. It will give you the average of the last 20 candles and draw the line to connect to that coordinate, to that point. Just look at the shape of this red line. That's the line that is connecting the result of your averages. It's almost over. Just watch. 15 seconds more. 10 seconds more. 6 seconds more. Just see how that line will stretch. Can you see? Did you see that? Tell me if you saw that. Tell me if you saw that. Some of you have never paid attention to this. I don't know why. Tell me if you saw that thing. You saw it, right? Awesome. So, and another thing is that curve, you see, this one might be changing. See, it's changing. It's shaking because it's computing as the price has not ended. But you see this part is like this now. It's like this part is stuck. It will never move again. But this one will be moving. The tip will be moving because that candle is still forming. So it's trying to recompute the close every time to get the exact. But when that candle finishes, that curve will stay. It will not move again. Watch now. Another candle will form. You see, it has stretched it. It has stretched forward. So from here now, from this place backwards will never change. They are like that forever and ever. The only place that will be moving now is this place. It will be doing like this because that candle is still moving. It's recomputing it. Is that okay? What am I trying to say? Because some of you might be thinking this thing is just to change. It's just to change. No, it is the tip that changes. The candle before that tip is permanent. It's like they hit it with a nail. It will never change. All right, you will see why I said it just watch now. In the next couple of minutes, you will see why I said. You see why that thing, that mention of the tip now, why is important. Just watch. Just know that this place will never change, but the tip will be changing. All right. Okay, let's go on. Now, how do we use this? We have learned this moving average. We've known how to draw, how to put it on our chart. We've known everything. So, Conrad, how do we use it to identify whatever trend or anything you want us to use it to identify? It's simple. Let's go on. So, interpreting moving average now is very simple. When price moves above your moving average, so when you have the moving average and price, the candles cross above the moving average, they start forming above the moving average. It simply means that from that time they cross above the moving average onward into the future, the market is uptrend. Did you get that statement? When look at this, look at the line here, look at the moving average line, the red line. From this place, it was down, the candles were down, and then they crossed up above the moving average. And that's the place I circled. That's the place where they crossed from below to upward above the moving average. From this point, when you see this point, you can say that, technically, you can say that this asset has now started an upward trend. Upward trend means that it will start going upward. Remember, the word trend is different from wave. I'm using the word wave, but that's not the word I use in my class. I call it swing. Wave or swing is different from trend. Trend is the primary direction. Wave can move in both directions. So there will be different waves inside a primary direction. That's why when you look at an ocean, there's the waves come to you, the waves go back away from you. The waves come to you, the wave go back from you. The waves come to you, but there is a primary direction of that ocean, which is what? Inside the ocean. So differentiate between wave. Wave is temporary upward and downward movement, but there's a hidden primary major direction. Is that okay? So now look at it now. When it crossed above the moving average, it has entered into an upward trend. Upward trend. You must understand that. And now look at the waves. It waved up, it waved down. It waved up, it waved down. It waved up, it waved down. It's waving up. So look at, but from here to here, the primary movement of this asset was upwards. Like you're climbing a step up, you wave up, it will go up, you go down, you go up, but generally you are elevating. Are you getting, guys? Are you getting me? Are you getting me? Please let me know if you are getting me. There's a difference between a trend and a wave. A trend is the primary direction of an asset. Waves can go up and down in that same trend. Waves can go up and down, so don't get confused when you see a wave down. But the trend, the primary trend of that asset is upwards. If you can catch what I'm saying, guys, you are made. If you can catch it, you are made. All right. Understand look at what has happened here. It moved above the moving average line, indicating that from this time onward into the future, we have now entered into an upward trend. Speak the right English. Trend. When you say trend, everybody understands in my class what a trend means. They don't confuse trend with waves in my class. They don't say, Mr. Conrad, and why is this thing trending up and trending down? Trending up and that's the wrong English. It's not trending up, it's waving up and waving down. Or we call it swing. You swing up and swing down, swing up and swing down. When you mention trend in my class, trend is the primary direction. And that's our focus. When we can understand the primary direction, we can play with the wave. We can ride the wave. We can ride it. We can enjoy it when it goes up. We can even make money from each of the wave. Understanding is the key, guys. Understanding is the key. So trend is the primary direction, and that can be identified by your moving average. All right. Okay, let's go on. We still have one more thing to do. Look at the downward trend. Same thing. It crossed from here, moving across the red line. And once it crosses the red line, it simply indicates for us that this thing is in a downward trend. It does not mean that it will not wave up and down in a downward trend. It would wave up and down. And that's what you saw here. It waved down, it waved up. You waved down, you 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 waved up. But generally from this point to this place, it is a downward trend. Guys, are you catching this? All right. Because I still have one more thing to do. So interpreting, we're talking about interpreting the moving average. So when the price moves below the MA, that's moving average. When the candles move below the moving average, we call it a downward trend. All right? Okay? When the candles go below the moving average, we call it, I should rephrase what a wave is. A wave is just a temporary movement. It can be in the direction of the trend, it can be against the direction of the trend. But trend is the primary movement, is the main movement, is the core movement, just like the ocean. Just like the ocean, you look in front of the ocean, there's wave coming towards you, there's wave going away from you, there's wave coming towards you, there's wave going away from you. But when you want to know the trend of that ocean, you jump inside and do like this for 1 hour. Anywhere you find yourself is the trend of the ocean. But don't jump inside ocean, please. So I'm just joking. Don't jump inside ocean. You can throw an object there. And then the object will be waving up and down, and then you will see it in a particular place. Is that okay? Now let's go to another concept. We have dealt with one single moving average. Okay, I didn't do practical example. Okay, let me drop it now. Now, moving average, we'll use moving average 20 here. Okay. Now tell me, what is the trend of the gold on this M1 chart now? What is the trend? Can we say it's upward trend or downward trend? That's the answer. Mention one. Uptrend. Good. Using single moving average is uptrend. Look at it. It crossed up from here, and then from the moment it crossed up from here, it became an uptrend. But it's been having different waves. It's waved up, it's waved down. It's waved up. I don't know whether it's going to wave down. But from this point upward, you can see that it's uptrend. All right. You see, you're identifying it easily. All right. Even if I switch to, let's say, let me look for another time frame or another asset. This is Euro GBP. What is the trend? I'm on M1. What is the trend of this asset? Show me that you are catching what I'm saying. What is the trend of this asset? It's uptrend. All right. Downtrend. Somebody said downtrend. There's no downtrend here. It's uptrend. Look at it. The moving average, the candles crossed above the moving average, and then the moment it crossed above the moving average, it's been going up. Is that okay? You see, you are catching it. Everybody's catching it. Thank you. All right, guys. Let's move to our charts. Now let's look at double moving averages. Let's look at how can we use two moving averages? Of course, it's not only one moving average. Sometimes some traders go to the extent of putting two moving averages on their chart to help their identification of trend, even to make it even better. All right, you will learn that now. So you can use any of them. You can use single moving average, or you can use double moving average. All right. So how do we use a moving average? Means you put two moving averages on your chart. All right. There's one with a smaller period, and then there's one with a higher period. All right. If that place will put period, you will change it. There's one with a smaller period, and then there's one with a higher period. When the one with the smaller period, when it moves above the one with the higher period, we call it uptrend. It's another concept. That means the one with the smaller period. For example, now let's choose period 10 and period 20. That is the one we're using, right? And our strategy that I taught you last month called the riding the trend strategy. So the period 10 and period 20, two moving averages, we're going to put them on the chart. You'll see how it works. When the period 10 crosses above the period 20, we'll call it uptrend. Now we're using two moving averages, and we're referencing the two moving averages. We don't even need the candles again. We can actually remove all the candles from the chart and just look at the two moving averages. If they cross upward, we call it uptrend. If they cross downward, we call it downtrend. Look at it. Only two moving averages. We don't even need the candles. We don't need to see the candles. Just put the moving average on the chart. If the smaller moving average, the smaller period moving average crosses above the bigger period moving average, we call it uptrend. And again, remember, trend is run from waves. It can wave up, it can wave down, it can wave up, but it will still be an uptrend. And just like we have here, the red moving average here is a smaller period moving average. How do I know? I was the one that set it. It's 10, period 10. And then the white moving average here is period 20. So if period 10 crosses above period 20, it is the beginning of an uptrend. So technically, you can go and announce on top of a mountaintop and say, this asset is an uptrend from now. That's what we know. And that's how we trade. You say, okay, how do we know how long the trend will last for? Nobody knows that answer. Nobody knows the answer. But one thing we know, this asset is now in an uptrend, and the trend will continue until there's a change of trend. Make it simple. Is that okay? Make it simple. So, and then don't forget there will be waves. Wave up, wave down. Look at it now. There's a wave up, wave down, wave up, wave down, wave up, wave down. But even though when it waved down, did the trend change? No, the trend did not change. The red line still stuck above the white line. We're using the 2 moving averages this time around. No more 1 moving average. All right. So let's go on. Let's see the downtrend. Now look at the downtrend. The red moving average is the 10, is a small period moving average. It went below the white moving average, which is the 20 period moving average. And when the 10 moving average crosses below the 20 moving average, we call it a downward trend. You write it down, you underline it, you stick to it, you say, yes, it's a downtrend. Is that, are you sure? I'm sure it's a downtrend. But do you know how long it's going to last? We don't need to know how long it's going to last. We just need to ride the trend as long as it lasts. And then, what about the waves? Yes, the waves are normal. Just like you face an ocean, there's a primary direction of the ocean, and then there are waves contrary to the primary direction of the ocean. But you know what? You jump inside the ocean, whether we'll know which one has more power, whether it's the primary direction that has more power or the wave that has more power. Anywhere you land in the next 1 hour, we shall know whether it's the trend we should focus on or is the wave we should focus on. Are you getting what I'm saying? So the waves are normal. Understand that there has to be wave. But the trend is your focus. The trend is your focus. If the trend has not changed, you stick to that trend. If the trend has not changed, even though the wave is going in the opposite direction, you stick to that trend. I don't know if I'm making some sense to you guys. You're going to see it practically when you get on the trend and then there's a wave opposite that direction. And then you're asking questions. Wait, the thing is coming direct opposite to the trend. What do we do? Look at the trend. Look at the trend. If the trend has not changed, you stick with the trend. There will be wave in every trend. Is that okay, guys? All right, let's move on. Let's put two moving averages, and then you tell me the trend. 2 moving averages. Let's set it. The first one, trend, moving average. Using 2 moving averages. Using 2 moving averages. Use this setting. The first one, use period 10. The first one, use period 10, and then set it to apply to closing prices. Period 10 apply to closing prices. Then use period 20. Second one, use period 20. Then apply it to open prices. Now, if you ask me, how did I get these settings? I told you it's by studies and research. Is that okay? And then you can change them and test them again. I mean, for now, I'm just giving you recommended values, but as you grow on further, you can use any value you like as long as you know how to test whether it works or it doesn't work. So write these 2 settings down. We're going to set 2 moving averages on our chart now. One will be 10, apply to close. One will be 20, apply to open. Write it down. Quick. And then I'll show you practically how it works, how we set it down. Write it down. One is 10, apply to close. Oh, method. Thank you, Jerry Prince. What method? See, it's good to follow. What MA method are we going to use? Let's use exponential. I also tested it anyway. Write exponential. Method, MA method, exponential. Thank you for that. You see, it's good to follow. Exponential. All right, so write it down, please. Period 10, close exponential. Period 20, open exponential. Those are the 2 period moving average you're going to use now. And I'll show you how to set them. Here, shift. Don't change the shift, okay? Always leave the shift. We don't need that shift even. So are you ready? Are you ready, guys? I'm going to set it. I'm going to set it on the chart now. So an indicator, trend, moving average, period. Let's start with the 10. Period 10. Shift. Don't change shift. Always leave it at 0. We don't need it. Method, MA method, exponential. Apply to close. And then let's make it a little thicker, okay? Color doesn't matter. Let's just have 2 colors to differentiate the 2 of them, okay? So we have red for the first one, and then we'll click OK. So this is our 10 moving average. Look at it, the red line. Then we'll set another one. Indicator, trend, moving average, then period 20, method exponential, then apply to, you change this one to, open, right? Guys, let me tell you something I used to experience when I was teaching this thing in classroom. I used to bet with my students. I say, write this thing down. Let's set it now in your laptop, but let's bet. By the time I go around, one of you will set a wrong parameter. They will say, no, no. I say, let's bet. And then we will bet and I will eat their money. One person will set it wrongly. How am I telling you this? Watch that setting. Very important. I would have betted with you, but you're far away from me. I'm eating your money now. You see, so watch the setting. 10 apply to open. 10 apply to close. 20 apply to open. Exponential, exponential. All right? I get lost. My students always put the wrong figure. This is it, guys. This is it now. Are you ready? I have my moving average there. Have you written it down? Are you good to go? Talk to me, guys. I've set my 2 moving averages now, and I'm ready to analyze the chart. I've changed color too. Let's go. So I have 2 moving averages, and I've explained to you that when the 10 moving average crosses above the 20 moving average is an uptrend, and when the 10 moving average crosses below the 20 moving average is a downtrend. Now, tell me quickly. Let's start with GBP USD. What is the trend of GBP USD? I'm using daily charts. Daily charts. You have to be fast now. You have to be fast. What is the trend of GBP USD as I'm showing you using the double moving average? The trend, guys. Downtrend, 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 downtrend. Nice. All right. So let's go. Let's try another asset. What is the trend of USD CHF? USD CHF daily charts. Tell me the trend. What is the trend? Pa. Seconds. Tell me the trend in seconds. Be fast. What is the trend? Uptrend. Good. So now, what is the trend of what else? Let's look at. Do we have Bitcoin? Okay, crude oil. What's the trend of crude oil? No, crude oil is almost touching themselves. So when you have this kind of situation, you wait for it to cross over and give you the trend. Okay, so you have something like this. It's good we have an example like this. So let's go to gold. No, silver. What's the trend of silver? This is XAGUSD. What's the trend of silver? Daily chart. I want to see the trend. Downtrend. Interesting. I promise you guys will tell me the trend. Now, what's the trend of AUD USD? I need an uptrend. Hold on. Oh, Euro AUD. A lot of them anyway. I'm just playing with them now. I mean, a lot of trend. A lot of them. Hold on. I'm trying to look for something. Trying to look for different things. There's some of them that the moving averages will cluster to each other. You just wait for them to clear out. Okay. I've done this. USD JPY downtrend. USD CAD uptrend. AUD USD uptrend. Euro AUD uptrend. I mean, I'm looking for a question to ask you. Okay, look at this. This is interesting. What's the trend of this chart? This is GBP-CHF. Aha, I like this kind of chart. What's the trend of this chart? Guys, this is a downtrend. It is not a ranging. It is not anything. It is not uptrend. It is not sideways. It's not anything. This is where the beginning. This is where the problem starts. Where you cannot clearly, state what the trend is, and then you're going like this. This is a downtrend because the moving average 10 is below the moving average 20. Look at it. The red line is the one that represents the moving average 10. And then the white line is one that represents the moving average 20. It is technically a downtrend. All right? It's a downtrend. And yeah, that is it. It's a downtrend, guys. Is that okay? So don't get confused with the candle. I told you when you're using two moving averages, what you're looking at is the moving average themselves, the MAs. If they cross down, you say it's down. If they cross up, you say it's up. Is that okay? So there will be waves. Don't forget that. Let me show you some examples. I'll look for a very long chart to explain that to you. Now look at this. Look at this uptrend here. Let's look at the journey of this uptrend. This will explain something to you. Now, the moving average 10 crossed above moving average 20 at this place. Is that not? From the moment it crosses above the moving average 20, it becomes an uptrend. Is that okay? And it will remain an uptrend until the moving average 10 crosses below moving average 20 again. Are you following? Now, but look at the interesting thing. Interesting thing is that look at the waves that were forming. Look at the waves. Look at the waves. There's a down wave, and this one even came back to touch the moving average. All right? Look at what's happening now. Can you see what's happening now? What trend is this? What trend is this one now? Currently, what trend is this now? This is an upward wave, but what trend is this? What trend is this chart? No political state, no political, no indecisiveness. Please just tell me the trend. If it's an uptrend, tell me. If it's a downtrend, tell me. It's downtrend, guys. Guys, stay clear cut. Downtrend. This is the beginning of problem. If you cannot tell directly what the trend is, then problem has started. It's a downtrend, but it's having an upward wave. Can you see that upward wave? Can you see? This is where traders have problems. The guy is thinking that it started going up. It is not going up yet, man, Oga. It is not. This is just a wave up. We call it swing up. It happens in all the trends. But it's a downtrend. Understand the difference between a trend and a wave, and that's the chart. That's the reason why that one was a downtrend. That one I showed you. Is that okay? So somebody was asking me for time frame. Now, you can use any time frame you like. It depends on the type of. If you're a trader that trades on a long-term basis, you want to use daily charts. If you're a trader that trades on a longer term basis, you want to use maybe weekly charts or even monthly charts. But if you're a trader that trades on a very micro level basis, like you just want to know what is happening on the smallest level, then you go to a smaller chart. And let me tell you something. Both of you are not doing the same thing. Guys, listen to me. Listen and listen clear. It's another very good instruction. There are two of you, trader A and trader B. Trader A is trading on daily charts. Trader B is trading on 5-minute charts. Two of you are not the same in any capacity. You cannot analyze the market the same way. So trader A might see an uptrend on his charts and decide to ride it and take advantage. Meanwhile, trader B will see a downtrend on this chart and take advantage. And you know what? At the end of the whole time, both of them will make profits. You say how? Why? Because their trends, a swing, a wave on a daily chart, a wave is a big trend on a smaller chart. A wave. You know what wave mean now? I hope I'm speaking the right vocabulary now. You are the one that gave me the name wave. Me, what I used to call it is swing, but somebody called it wave. I called it wave rather. So in this class, we maintain the word wave. Now, a small wave on a daily chart is a gigantic trend on a smaller chart, and therefore a trader who is on a smaller chart will take advantage and make money. But a guy on the daily chart probably will avoid that wave, and then he will just focus on the trend. So what both of you are doing are different. What does that mean to you? That means decide what time frame you want to focus on first. Decide what time frame you want to focus on first. And that time frame depends on what type of trader do you want to be? Do you want to be a trader who focuses on a long-term basis of the market? You don't really have time to be focused on the micro movement of the chart. You want to look at the bigger scope of the chart. So you go to maybe daily chart, weekly chart, and so on. And then if you are the type who has time, you say, you know what, I have all the time in the world. I can be focusing on the chart. Then you can go smaller to H1, M30, M15, and so on and so forth. And note, always remember, both of you are not doing the same thing. So when you go and look at a trader who is trading daily chart and you saw him placing a trade on buy and then you are shouting that, why are you buying? Me, I'm on M5 and I'm selling. You are wrong. Me, I'm right. No, both of you are right. Both of you are right. Both of you will make money at the end of the whole day. Why? Because his trend is big enough to take care of all the waves. But his own small wave is an opportunity for you. And then you will ride it and you will make money. So, and his own wave, his own simple wave, small wave is a big trend for you. So you understand how the time frames work. So what I advise you guys to do, choose your time frame from now. If you're a busy guy, use time frames like H4, D1 weekly. Do you get me, guys? If you're not so busy, you can focus on your chart. Then use time frame like H1, M30, M15. Please, if you're a very busy person, don't go and be using M30 chart. It is too small for you. There would have been change of trends before you can even have time to look. You will miss a lot of opportunities. All right, so everybody should know their busy level, how busy you are, and what type of trader you want to be. Okay, I guess I have to chip that in quickly. Can you recommend the best time frame for us? How would I recommend the best time frame from you? I don't know your schedule, Prince. I do not know the job you do. I do not know what you do. I do not know whether you have time to stay on the chart 24/7. I do not know whether you are a medical doctor, you work 9 to 5 and come home late. I do not know whether you work in offshore, you go like 2 weeks without looking at your chart. So I cannot tell you the best time frame for you. Are you getting what I'm saying? You are the one to know what type of trader you want to be, and then you now use a time frame that can allow you to analyze the market based on that. Is that okay? So let's look at a strategy called riding the trend strategy. How many of you have heard that? How many of you have heard that before? Riding the trend strategy. That is my most popular strategy. When you see riding the trend, anybody that I should trademark this, I should trademark it. Anybody that go and write a book or write a trend, you come and give me tithes. So if you type writing a trend strategy, is Conrad all over the world. That's my conceptualization, even the strategy itself, even the components itself, you can't see it anywhere. Been tested by myself, by my student, by my teammates, and I've done a lot of videos on that. You guys have probably seen that, and that's what I did last month. Writing the trend strategy is a very simple strategy, very, very simple, and it helps a beginner to understand trend and to take advantage of trend. It helps you in simple risk management. Is that okay? So the right trend strategy is simple. The first thing is we use the indicators that are used. The indicators that are used are the indicators that I just dealt with. That is the EMA, exponential moving average. Exponential moving average. That's the EMA. Those are the two moving averages I just dealt with now. Exponential moving average. That means setting two moving averages to 10. Exponential moving average. That's EMA. So we use EMA 10. All right, and then we use EMA 20. Exponential moving average 10 and exponential moving average 20. Are you me, guys? Stay with me, 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 stay with me. And then this means that you will set your period to 10. Just the same thing I did now. Your period to 10. Type of MA type, exponential. And then close, apply to close. Same thing I just say you should write down now. And then this one means that you set your period to 20, MA type exponential, apply to open. All right. So the rules, I'm still dealing with writing a trend strategy. The rules of writing a trend strategy, the rules. So write down the rules. Write down the rules of the strategy. The rules. So I'll do the rule for buy and I'll do the rule for sell. So the rules for buy, before you can buy, the rules for buy. Number one, the exponential moving average 10, EMA 10, must cross above EMA 20. That's the first rule to buy. It must cross above EMA 20. Number one. Number two, and the cross must not be far away. So the current price must not be far away from the point we crossed. The current price must be close to the point where the cross occurred. This is the most important part. This is the most important part. When the 10 moving average crossed above the 20, make sure that you get into the buy at that time. Don't wait when it has crossed for a long while. So if it has crossed for a long while, avoid entering. It is late. It is late. It is late. Then this does not excuse you from watching the writing a trend strategy video. I'm just trying to recap what is on the writing strategy video for those of you who have not seen the video. All right, and make sure you watch it. Now, the third thing that I added in that strategy is what I call the filter chart. So check the trend of 2 time frames. 2 time frames. Check the trend of 2 time frames above your desired chart. Above your desired chart. Okay, this condition 3 is that if you are trading on M30, for example, after M30, you have H1. After H1, you have H4. So it is good for you to check the time frame. What am I saying? The trend of H4, even though you are trading on M30. Why are you doing that? You want to be sure that more sure that what you are doing on the microscope level is truly in the direction of the bigger scope of the market. That's what you want to be sure of. All right? Even though that third condition is often optional, but it's good to do it. It's often optional. You can actually skip the third option. But I like you to put it because I want you to be in the trend of the bigger picture. I want you to be trading in the trend of the bigger picture. These are the rules for buy. So let me go to the chart and show you an example, and then I'll come back and show you the rules for sell. Now, M30. I don't know. Let's try. Okay, let's try another asset. Downtrend. All right. Hold on. Just hold on. I'm trying to get something. So let's assume I want to trade on H1. That's what I'm trying to do. Okay, guys, let's use this one. Now, let's assume I want to trade on H4 charts. All right. Look at what's happening now. This is AUD-NZD-H4. All right. And you see the moving average 10 is about to cross upwards above the moving average 20. Is that okay? Just stay close and watch what's happening. The moving average 10 is about to cross. Oh, so moving average 10 is about to cross. I mean, the MA10 is about to cross above MA20. The red line is about to cross above the white line, and I'm watching. I'm watching it because I want to buy. I know that it's still showing downtrend here and waving up, but let's say it's going to cross above it. All right. Now, what I would do is when it crosses above it, when the moving average 10 crosses above the moving average 20, I'm going to click a buy and I'll buy. But before I buy, it is good for me to check 2 time frames above the current time frame I'm using to check the trend. So now look at, I'm on H4. After H4, what do I have? D1. After D1, what do I have? W1. So I'm going to click on W1 to check the trend of W1. See? What's the trend of W1? What's the trend? Tell me, what's the trend? What's the trend of W1? W1 is what? W1 is uptrend. Thank you. So W1 is already uptrend. It's been uptrend since when? Let me see how many months ago was that? It's been uptrend. W1 is weekly chart. It's been uptrend since what date is this? Since 15th of March this year. It's been uptrend since 15th of March this year. Is that okay? Now on H4, look at H4. H4 is about to cross up now. So I'm waiting. Is that okay? The moment H4 crosses up, now H4 trend is now in the same direction with W1 trend. That's what I mean by checking the higher time frame of the desired time. You want to trade on H4. H4 is a desired time frame. So all of you should have your desired time frame. I told you how to get your desired time frame. Look at your schedule. If you're a very busy guy, use H4 and above, H4, D1, and so on as your desired time frame. If you're not so busy, you are free to trade every time, then you use your desired time frame should be something like H1, M30, and so on, and smaller chart like that. Okay, so that's how you choose your desired time frame. Now, having chosen your desired time frame, when you are looking for an opportunity to buy or to sell, and you want to enter into a trend, before you click to enter buy, or in this case now buy, check just to be sure that you are, just to be double sure that you are also in the direction of the two time frames above your desired chart. Is that okay? So in this case now, I'm trading on H4. I'm waiting for it to cross so I can buy, but I've already seen on W1 that W1 is already an uptrend. So I'm waiting for this to cross up. If it crosses upward, I'm going to buy. Is that okay? All right. Let's check another one. I want to check the one that has already crossed, or that just crossed. That will give you a good example. Or maybe I will just use H1 instead. If I'm not seeing on H4, I'll just use H1. All right, let's use H1 as our main chart. All right. Now see H1 as our main chart, then future chart will be D1. That's the problem now. We have to make sure that both of them are in the same direction. Just hold on. This is the whole concept of riding a trend strategy. Now look at this. Look at this example anyway. Look at this now. This is H1, Euro NZD H1. And it has crossed up. It crossed from here. It has crossed up here. Up to this point. Look at it, crossed up here, and then the market has the different candles are formed, and then this is where the current candle is. Now, the question is, should I enter a buy in this kind of situation? Because condition 2 says that the current price should be close to where it crossed. All right. Now, there's argument there because there has been a long movement after the time it crossed. All right, because look at where it crossed, look at the current price. Anyway, that's not the point. Let's say I want to buy now. Let's say I want to buy. Now, This is H1. I will need to go 2 time frames above. H4, then I'll go to D1. Then check the trend of D1. Now look at the trend of D1. Look at D1. D1 is uptrend already. D1 has crossed several. It crossed last. On Friday. So D1 already has gone into an upward trend. So for me, all I just have to go is go down to H1 and look. I would have waited for an opportunity to buy. If I was there when it didn't cross up, I would have entered a buy, and by now I'm in profit. But at this time, it might be a little late to enter. The best time to enter is when the cross just occurred. Around that place. But this is arguable. You can enter here anyway. So let's do more examples. I just want to really clarify, give you very, very good examples of this. Now look at another one. Look at this very interesting one. See, H1 has crossed down here. Is that okay? H1 has crossed down here. So, and then it has not gone far from the point it crossed. All right. We could enter a sell. The condition, I've not given you a condition for sell, but condition for sell is the opposite. So first thing is that there must be a cross on your main chart, and then you go to 2 time frames above to be sure that we are in trend as well on the higher time frame. So if you look at D1 here, D1 is down. D1 is downtrend. So H1 is my own desired time frame, and it's just crossing downwards. So I'll get on the sell immediately. Look at the distance is not so far from the cross. And it's from that H1 that I will also exit. Is that okay? So I'll talk about exit later, but let's just stop. I'm still dealing with entry now. All right. So if you have conflicting trends, then you just have to wait for the trend to clear. Is that okay? Some of them just crossed far away. That's why I'm jumping them. If the point where it crossed is very far, then there's nothing we can do about it. Let's see other time frames. Let's see D1 chart and monthly chart. So monthly chart down, D1 chart just crossed down. All right, that's AUDCHF. Okay, let's see this one. Uptrend, downtrend. Why are they all different directions? They are going different directions. Uptrend, downtrend. Okay, just keep checking it. Okay, just look at this one. Let's take a look at this. So this is AUDCHF daily charts. And look at it crossed here, and then look at where the current price is. So when you have this kind of crossover, it's a good entry because you see it has not crossed far away. It hasn't gone far away from where it crossed. The candles have not gone far away, and also the moving averages have not crossed far. They've not gone far. Look at the peak of the moving average. The mouth of the moving average, and look at where it crossed. So it's just a little distance. So if I'm going to enter a sell, before I enter a sell, it's good for me to check the 2 time frames above, and that's like monthly. And I'll see monthly. Monthly has been a downtrend for a long while. Is that okay? So this is the concept of riding the trend strategy. Is that okay? Then finally, let's talk about the exit. So where do we exit? So this is buy entry. This is rule for entry. For buy. Now let's talk about exit. Finally. So I'm going to just pause here. So the exit strategy is when the trend in your desired chart, in your main chart, what do I call it now? Desired chart. Let's call it desired chart or main chart. The trend on your main chart changes again. When the trend of your main chart changes again. So that means that if you enter a buy, if you enter the buy on maybe H1, because the 10 moving average crossed above the 20 moving average, you will stay on the trade. You allow it to keep making profit for you until the trend on that H1 changes. Is that okay? Until the trend of that H1 changes, that's when you can exit that trade. All right? That is the the major concepts of riding a trend strategy. All right. So that's what I want you to practice. Look at this now. Can you see this trend? This is Brent crude oil. It's just crossed, and what I'm looking at is the mouth of the end of this moving average. Look at the length from here to here. We can't measure it. We cannot say get tape and measure. It's not mechanical. It's not mechanical. All right. So it might be a little discretional for you, but it's not measured on candle. You cannot count candles and say if it has gone by 3 candles. No, that's wrong. Is that okay? Did I answer that question? Now compare this mouth, this moving average cross to something like, let me look for another one. Compare this one to something like compare it to something like even this one too is not gone too far. Compare it to this. Can you compare them? Compare this chart to, where's the crude oil again? Compare it to this. Did you get the difference now? Compare these two. You see, this one has gone too far. You can't enter a buy in this trend, even though the higher time frame is uptrend. It is late. But in this example, in this one, let's check the higher time frame weekly. It's kind of uptrend. So this crude oil now, this is a perfect example. This is an uptrend. Look at it on weekly chart. See crude oil, Brent. Now H4 is just crossing up. This is a perfect buy example. I don't know why I did not get this one. This is a perfect buy example. So what I mean by not gone too far is that the end of your moving average should not stretch too far from the time when the moving averages cross. Look at from here to here should not be too far. You can differentiate it from something like this. Look at it crossed here and look at where the moving averages are. Okay, so that's the question. Exit. Some of you are asking about exits. All right, good. First thing I'll say is go and watch Riding a Trend Strategy. I've already done the video for you and it's detailed, and I talked about different type of the exit to use. But let me give you one exit here. Let's assume that you took a buy here. You took a buy here, and this thing has been going on, and you are making profits. You will exit this trade when this trend changes to downtrend. You will exit. Let's say you took the buy here, and then you're waiting, because when you take a buy, you have to ride that trend. That's the whole idea of riding a trend strategy. You have to, when you get into a trend like this, a buy like this, make sure you are getting it when they just crossed. Don't forget that just crossed. It's very important. Some of you just open your chart and you see that it's uptrend, you just enter. No, entry point is different from trend. So entry point, the best entry point is when the moving average is just crossing. Mark the word just cross. It's not confusing, guys. It's not number of candles. You just look at the tip of the moving average and see whether it's far away from where it crossed, because you want to take advantage of the profit. Imagine a trader entered the buy from this place, and that trader entered the buy from this place. Who is making more money? Of course, the one that entered earlier. So why not be that trader? So if you missed the entry, please stay away. It's late. Don't practice the habit of jumping into a trend when it has gone far. Don't practice the habit, okay? So exit is when the trend changes. Is that okay? Let me take you quickly to the curriculum of the Forex apprenticeship program. So I also want to quickly show you some of the strategies that are posted on the Telegram channel, and that we cover them also in the apprenticeship program. We'll share with you the curriculum, so you'll get the curriculum and get the details. But I just want to quickly run you through some of the strategies that you can use to trade. So the first module is the trend analysis and market phases. All right, so that's where we zero into trend and types of trend and different phases in the trend that will deal with pullback, retracement, exhaustion, and all those kind of cycles. Then chart patterns and candlestick patterns. Then we'll now start dealing with strategy. So you see failure swing strategy. Then we also have the pivot point strategy. This is the curriculum. I'm looking at the curriculum. This is a pivot point strategy. And then we have the Bollinger Band strategy. That's the third one. And then we have Fibonacci retracement strategy. And then we have price action primer, and then we have the riding the trend strategy. You see the strategy that I did for you. I told you that is also a course in our apprenticeship program. Can this strategy work on volatility index? It can work on all assets. Now, like I told you, I'm not trying to sell apprenticeship program to you. All right. The foundation course you are doing is a sufficient program. I mean, for a beginner, let me put it that way. It's a sufficient for a beginner. So you practice what you've learned, watch the riding trend strategy extensively. With the knowledge you have gotten here now, added to your riding trend strategy knowledge, I think you can place a trade. You understand the trend now. Now you understand the strategy, core riding trend strategy. That is good for you to start with. If you feel that you want to take the knowledge forward, then I would advise you, based on the testimonials I've watched and everything, I would advise you to take it up. The apprenticeship program, we decided to run this program because we want to give a thorough knowledge to traders, and by so doing, we made it 10 weeks program, 8 weeks, but usually we stretch it to 10 weeks, and this is what the learning outcome contains. So you're going to be going away with 6 strategies: failure, pivot point, Bollinger Band, Fibonacci, riding the trend strategy, price action primer, and primer. We have what they call simulation sessions. What is simulation? It's part of research. Simulation is testing a strategy. So that will help you even after the program. If you learn a strategy and Conrad is not there, or your tutors are not there, you know how to test the strategies without putting your real money first into problem. So that's what simulation is about. I'll give you a tool to do the simulation, and I'll teach you how to go about it. We have the trend analysis and market cycles. That's module 1. So this module 1, guys, this trend analysis, this is the most important part of the course. It's not even the strategy. Most of my students, when they got in, they were looking at strategy. They say, Mr. Conrad, you say you teach us strategies. Hey. But by the time they finish the trend analysis, they understood that some strategies are specific for some phases of the market. In module 3, you are now looking at strategies now. Failure swing strategy, the very powerful strategy. Then pivot point strategy, and is an intraday strategy that can be used on pound and euro pair assets only. Bollinger Band strategy, powerful strategy on the concept of exhaustion. Exhaustion is when the trend has ended, but you know ahead of time, because even the moving average has not crossed, but you already know that the trend has ended. That's exhaustion. So you study it with Bollinger Band and RSI and all those concepts, and you know what strategy to use for them. And then Fibonacci retracement strategy. So that's you now in the retracement phase, you now learn what strategy can you use to take advantage of the retracement phase. Some of you are wondering, what's a retracement phase? I told you that there are waves, right? So let's just call those phases waves. Waves in a trend. So there are all different waves in a trend. How do you deal with them? What kind of strategies do you use? How do you even identify those? What to call these waves? There are different waves. Some waves are down, up, and you'd have dealt with them in the module 1. Then we have the price action primer. So you see price action. So we'll look at what is it all about, and how can we use it to add to our knowledge? How can we add that to our tool, our knowledge list, our knowledge box, and use it to trade? Right? Then our popular riding the trend strategy. You see, lovely strategy. Everybody loves the strategy. It makes money. Easy, simple. Just go and watch the video. We have risk management, the risk management. All right. Then delivery mode. How do we deliver this program, the apprenticeship program? We have lectures. We have live lectures every week, every Saturday usually, and then it's recorded. And then we have tutorials every Thursday. I conduct all of them. Tutorials are practical sessions. Lectures are You listen to me, you take notes. The tutorials are you ask questions and I deal with your questions. There's no time. We relax, we laugh, we take questions. So it's a more of you, throwing the questions in and then we deal with it. Simulation sessions, we simulate historical data. Then you have assignments, guys. There's assignments. I love assignments a lot because assignments are a way for you to practice what you have learned. Every week you have assignment. One of your assignments every week is what I call the weekly market analysis. Weekly market analysis. I've emphasized it several times to you. Every trader has to plan this week before the week starts. You have to start on Saturday and Sunday to design how you're going to take advantage of your week. All right. Then when you start to trade your demo account, we have what's it called, monitoring. There is a way I monitor I help you as you start your demo account, and then when you start your live account as well, I help you to monitor and then advise you. We'll have a one-on-one session with you before then. Anyway, eager. I'm so excited. I'm ready. All my energies are ready to help you out. So see you guys. It's been a wonderful time with you. I want to say thank you so much. It's been a wonderful time. God bless you all. It's been amazing.